You don't need to be rich to start investing. Seriously, you just need consistency and a little bit of patience. So many people think investing is this exclusive club for Wall Street wizards in expensive suits. But that's just not true anymore. The secret isn't having a huge pile of cash to begin with. It's about starting early, even with a small amount, and letting your money work for you over time. Think of it like planting a tiny seed. With time and care, it can grow into a massive tree. That's exactly what can happen with your money. So, why should you even bother with investing? Why not just stick your money in a savings account where it's safe? Well, here's the hard truth. The money sitting in your savings account is actually losing value every single day. It's because of a sneaky little thing called inflation. Inflation is the reason why a coffee that cost $1 20 years ago now costs $5. It means the purchasing power of your money decreases over time. So, while your savings account balance stays the same, what you can actually buy with it gets smaller and smaller. It's like trying to fill a bucket with a slow leak. Investing, on the other hand, is your best tool to fight back. Historically, the stock market has returned an average of around 10% per year. That's way more than the typical rate of inflation. Investing doesn't just protect your money from losing value. It helps it grow, often much faster than inflation can eat away at it. It's the difference between watching your money slowly deflate like a sad balloon and watching it expand into a powerful portfolio. Okay, so you're convinced you need to invest, but where do you even start? The world of investing can seem overwhelming with all its jargon. But let's break it down into 3 simple categories: stocks, bonds, and funds. First up, stocks. When you buy a stock, you're buying a tiny piece of a company. You become a part owner. If that company does well and its value goes up, the value of your piece goes up too. It's higher risk, but it also has the potential for higher rewards. Next, we have bonds. Think of a bond as a loan. You're lending money to a government or a company, and in return, they promise to pay you back with interest over a set period. Bonds are generally considered safer and less volatile than stocks, but they also offer lower returns. They're great for balancing out the risk in your portfolio. Finally, let's talk about index funds. This is where it gets really powerful for beginners. An index fund is like a basket that holds hundreds or even thousands of different stocks or bonds. For example, an S&P 500 index fund holds stocks from the 500 largest companies in the US, instead of trying to pick individual winners. You're betting on the market as a whole. This automatically diversifies your investment, which is a fancy way of saying you're not putting all your eggs in one basket. It's a simple, low-cost way to get started and is recommended by some of the most successful investors in the world. Now, let's talk about the real magic of investing. The power of compounding. Albert Einstein supposedly called it the 8th wonder of the world. And for good reason. Compounding is when your investments earn a return, and then you earn a return on those returns. It creates a snowball effect that can turn small, consistent contributions into a massive amount of wealth over time. Let me give you an example. Let's say you start investing just $100 a month at age 25, assuming an average annual return of 10%. By the time you're 65, that small monthly contribution could grow to over $500,000. That's right, over $500,000 from just $100 a month. The key here is time. The longer your money has to grow, the more powerful compounding becomes. That initial investment starts to generate its own earnings, and then those earnings start to generate their own earnings, and the growth becomes exponential. It's a graph that starts off slowly and then shoots for the sky. This is why the best time to start investing was yesterday. The second best time is right now. So, how do you actually take that first step? It's easier than you think. You don't need a financial advisor or a trip to a bank. You can start right from your phone. For many people, the simplest way to begin is through a workplace retirement plan like a 401k, especially if your employer offers a match. That match is literally free. Money don't. Leave it on the table. If you don't have a 401k, you can open an IRA, which is an individual retirement account. There are several types, like a traditional or Roth IRA, each with its own tax advantages. Once you've opened an account, a great place to put your money is in a low-cost index fund, like we talked about earlier. Just choose a broad market index fund, set up automatic contributions, and let it do its thing. The goal is to make it simple and automatic, so you can set it and forget it. The biggest hurdle for most people isn't the complexity or the money. It's just getting started. So here is my challenge to you. This week, open an investment account. You can do it online in less than 15 minutes, and you don't need to fund it with thousands of dollars. Start with whatever you're comfortable with. Even if it is just $20, the act of starting is what matters most. Take that first step today, and your future self will thank you for it. Thanks so much for watching. If you found this helpful, please give this video a like and subscribe for more tips on how to build wealth and live a richer life. See you in the next one.